folks, Dan Frio here with your Mortgage Minute, where we discuss and try to figure out what in the world's going on with mortgage rates. So if you're at this channel, that's exactly what you're looking to do. You're like, hey Dan, what direction are mortgage rates taking? Why? Well, I'm building a house and it's not going to be done for 6 months and I don't know what rates are going to do. If I wait another 6 months, like I've done, I started out at 3 and now I'm at 6. So if I wait another 6 months, am I going to be at 9? Those are the kind of things that I try to forewarn you of what's going on with mortgage rates. And then I do have some options for you out there. If you're building, buying, refinancing, I have some options for you on how you can lock in your rate while you're kind of still waiting for your house to be completed or while you're still shopping for a home. I'll give you that information at the end of the video. But what we try to do here today is figure out with the economic news coming out today and the rest of the week, what direction are mortgage rates going to take? Well, if you've sat on the sidelines for the last week or so, you've had a nice reprieve in mortgage rates. So let's get over to them and see let's check out the rates and then go through the economic calendar and the news events that will play havoc, I think, on the markets today. So you can see here, here's where rates are right now. This is basically, well, let's take that back. This is where mortgage rates ended yesterday. So this is a report that Mortgage News Daily puts out on a daily basis that just gives out the national averages on rates. Now, it's tough when you look at national averages because you have a different credit score and a different dynamic than your neighbor and your coworker and your brother, your sister, whomever. You don't have the same credit profile, nor do you have the same profile when it comes to mortgage programs, okay? So I want you to at least just get an idea where the national averages are, but the biggest thing here is I want you to see what adjustments have taken place from the previous day. And the reason being is this: most people kick the cans and they'll want to get 100 different quotes and then they'll go back through and try to renegotiate again and again and again, and they just lose it, okay? So what happens is we've had a nice reprieve in the market. So what's happening right now, we're having some profit taking and it's pushing up rates. So if you got a quote 2 days ago, it's not the same as today. It's basically not the same as what it would have been yesterday. So that's why I try to do this, to make sure you're an informed consumer when it comes to mortgages, especially real estate, especially when it comes to the financing piece of the puzzle. So let's get over to the rates here. Again, the dynamics I want you to see in here is basically not necessarily the rate, it's the adjustment from the previous day. Now, recently we've had these adjustments in these areas here where they've been dramatic. They've been, we've seen rates go up 0.25% in 1 day. Believe it or not, in 1 day. So I love when the markets are flat. But let's get over to basically the only thing in the headline news today is job openings. There's job openings fell in May, but still outnumber available workers 2 to 1. So there's a JOLT index that comes out every day that goes over how many, not every day, every month, that shows us how many job openings there are. And the reason why I focus in on that, and a lot of the economists focus in on that, is inflation. The piece of the inflation that I think is going to be the stickiest is wage inflation. Okay, why is that? Well, you can see there's 2 times the amount of jobs openings as there are people to fill it. So people can get really picky when it comes to choosing a job and choosing the income. Okay, so if you don't like the income or the job, you wait for the next one and the next one, because there's ample job openings. So my piece is, I think I'm still on the side of the fence, like the Fed, that thinks a lot of this inflation is transitory. Just like fuel, you see a lot of energy costs just plummeting right now, and you're going to start seeing your gas station prices drop dramatically. Thus, it's going to help inflation in that sector quite a bit. But the one section in the economy I think is going to be really sticky is wages, because of this data here. So based on that, what's going on in the markets? Well, the MBS market doesn't like this data for some reason because it's giving back. So what we look at here is what's going on with the mortgage-backed security. This right here is a bond that trades on Wall Street. That is the yield on this bond is the biggest component of your mortgage rate. Okay, so that's why we follow this. So what happens here, this is what's happening to the price of the mortgage-backed security bond. Okay, when this price goes down, as well as any other bond, it pushes up the yield. So in this case, because it's a mortgage bond, if the yield goes up, That means your mortgage rate's going up. So we're going to see probably an adjustment to mortgage rates of today of at least 0.1, maybe 0.125 in rates. But let's go over rates real quick. Like I said, these are where rates ended yesterday. So when Mortgage News Daily finishes up all their surveys and everything, and they repost these rates, don't be surprised if you start to see rates going up about 0.1, between 0.05 and 0.1. So not dramatic, but it is an increase. You can see down through here, the trend for today is completely negative, but I still can't get the context behind all of this. But what I have to do is say, if you look at this chart right here, if you look down at the bottom chart, you can see a nice little rally down through here, okay? What I think is going to happen today is based on this news as well as profit taking. This is a bond. Remember, this is a bond that trades on Wall Street. So we had a nice little rally in that price of the bonds. You're going to start seeing some profit taking. So you're going to start seeing the prices come down a little bit. Also, the Federal Reserve is starting to liquidate their mortgage-backed security holdings, which is going to exasperate this a little bit more. So that's why I suggested to all my loan officers today to lock. Because I think we have a nice little rally the last few days to give rates a nice reprieve. But if you're with us, you're locked in, and because I think rates are going to take a little pop from here. So that's that news for today. So that's actually the report for today, because there's no economic news out today, and there's really nothing kind of throwing a huge curveball to the system other than the JOLT index, and I think there's profit taking as well today. So my name is Dan Frio. I do this every day. If you'd like to reach out to us and get some assistance if you're looking to build or buy a house, why? We have two special programs for you. If you're building a house, we can lock you all the way out to 6 months. Your builder's lender's probably saying, can't lock you until you're 30 days from closing. Well, if you sat on the sidelines for the last 6 months, you went from 3 to 6%. So if you sit on the fence for the next 6 months, could you be at 9%? I don't think so, but why don't you lock in now and secure that rate lock? So that defends you against rates going up. What if rates come down? We'll renegotiate with your lender or move you to another lender to get you market rates at that time. So it's a win-win situation for everybody. So to find out more about me and my team, please go to therateupdate.com. Me and my team are now federally chartered, meaning we can help you anywhere in the country as well as Puerto Rico. So I hope you like my videos. If you do, don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. Take care. I'll see you later today. Bye-bye.